Everyone, this is Ben from Cheddar Flow, and we had quite the bearish week in the market. As everybody probably knows, on all the indexes, just a ton of blood in the streets. So there are a lot less setups this week going into them, but I still found 3 solid setups that we could potentially trade, and I'll go over them today in this weekly recap. And by the way, if you are not subscribed to the channel, just subscribe below. All you got to do is click one time on that button, and you can see all the videos afterwards. So we'll get started right away. All right, so the first thing that I want to do here for determining what tickers I want to go over, I typically look first at the flow overview tab on Cheddar Flow over here. And normally, if you do follow these videos and you're subscribed and watch them each week, you'll know that I like to look at the bullish flow a lot more to determine what picks I'm going to play from that week or the next week. But because it has been very bearish lately and the trend has been bearish, I'm actually looking in the bearish flow more so for this week. So what I found by looking through the bearish flow tab here is Tesla actually has a lot of bearish flow for out of the money near-term expiration. And the near-term is key because actually there's a lot of bullish long-term in terms of March expirations and April expirations that I saw. However, the bears are out in full force for the near term. And remember, we're trading the near term for maybe this week, maybe like a multi-day swing. I'm not doing anything super long right now. And also the contracts are pretty expensive if you want to go super long. So a lot of people's accounts may not be able to trade that. But basically just looking through this, a lot of bearish flow that we saw here. And when I was looking through this, I saw that a lot of these were expiring on this past Friday, so the 21st here of January. And the reason that a lot of these were traded on this day is because we had a major option expiration day, the OPEX, on Friday. So there was a ton of notational value in contracts that were expiring for Tesla, and it's not a surprise that a lot of these strikes were getting hit on the tape. These either could be people closing positions, they also could be people day trading during the day just based on how much volatility there was. So a lot of these 121-22 strikes were on the tape, and those are going to be discounted for this following week. I don't care about these because it's already passed, it's already expired. So what I did was went to our options order flow tab here, clicked in Tesla, and I filtered. And you see a lot of these. You'll see me filter a lot of the times in videos. And I filtered on the side here for 200,000 plus premium on Tesla, and then click done. So a lot of these 200,000 plus orders in terms of premium were for stuff that was further expiration. So that kind of cleared it up a bit. And what I noticed after looking through this here is we saw a lot of these 128. So this is the expiration for this week. A lot of these 128s were far out of the money, a lot of premium, and just overall they were sweeps or either block prints, so it shows that they were hitting the ask or it's an institution. So these guys are very bearish on the stock near term. So very interesting to see because that would kind of fit with what the chart is. The chart looks bearish near term, and the reason I say that is we had a fake breakout. We broke out of the flag. You can see this was the top of the flag, this is the bottom of the flag, both green lines, and we broke out and it quickly got rejected, fell back down, rejected again, and now we are on our way down to the bottom of this flag, roughly 890. So I think we're going to hit 890 first before we actually see some maybe bullish trend for the longer term coming up. So why I say that is, one, the chart dynamics work that way, and then two, the flow is also pointing in that direction. 920 strike, out of the money compared to the 945 when they bought it. We have a 930, 925 right here, 930. So these were continuously getting hitting the tape at the end of the day on Friday. So these people are holding over the weekend most likely. So very interesting to see there. A lot of these bullish prints like this one, again, like I said, are for a further expiration. So not going to help us as much near term. Could be if you want to do a longer swing, like I said, but a lot of those are bearish. Again, right here, 1.5 million for middle of February, 950, another 1.5 million, another 1.5 million. So bears are out in full force on this, and it looks like we're probably going to go down to 900, maybe even 890, and we'll see what happens from there. All right, so the next one I want to talk about is Netflix, and this one, everyone's familiar with what happened there. Their earnings report just went terribly, and it fell quite a bit off of that earnings report, literally from when it closed at 507 all the way to roughly 400 at that open. So not very good for them. A lot of volume as well on this day in comparison to other weeks, like way more than ever before on that day. So a lot of selling pressure with that. However, there seems to be a lot of activity in it, obviously, because it did have a lot of volume, but the activity is surprisingly bullish. And the interesting prints that I saw was, one, this massive 13.9 million print for March 18th, and it's a 400 call. They got this at 381, and I instantly made a mini clip for the Twitter for Cheddar Flow, which some of you guys may have looked at that. We did take it, or I ended up trading it around 380 when I picked it up, and it actually shot up to 400 very quickly. So I ended up catching this move. I got out of it because I was up on the contracts. However, I find it interesting that we closed very close to 400. It actually looks fairly bullish, at least for near term. I'm not saying it's going to continue up and go super high. However, as a trade in terms of Monday or maybe Tuesday of this week, there is a potential we actually can go up and bounce maybe a little bit off of it. And you could trade this if there is some momentum into open on Monday especially. So these guys, again, they picked a further expiration. Could they have already gotten out of their contracts? Yes, definitely. However, determining based on the fact that they had a 318 contract or expiration on it, there's a potential they could still be holding because it actually does have some strength in it. So something to look for coming up this week. Again, we also saw 1.3 million for a 617 of 2022. So again, this person is thinking a little bit maybe longer term on it and may still be holding their contracts. So this was a very quick turnaround when it did bounce, and I don't think that was expected because they probably would have traded it with at least maybe like a February expiration. But it does look decent, at least right now, for a bounce on Monday or Tuesday. So keep this one on watch because, again, there's a lot of volatility on this one. You could make a lot trading it. Some very good volume to supplement it as well. All right, now let's talk about the elephant in the room, SPY. Again, this one has been really wacky for the past like a week or so. I've actually been trading it fairly well intraday just because there's a lot of volatility. So it is a trader's dream. Although you do have to be very careful with this just because of the volatility, and this is setting the tone for the rest of the stocks on the market. And because it has been very weak lately and falling down quite a bit, the rest of the stocks have been falling a lot as well and has shown a lot of weakness, especially growth stocks. The ones that prospered during like the COVID times and increased liquidity of them, they have been falling and hurting really badly. So SPY is, again, the flow is all over the place as well. We saw at closing out at the end of the day, there's a lot of bearish prints, and these are far out of the money. So these are kind of scary. 423 strike. When they bought it at 438, another 423, 419s over here. This is for a lot of premium. That's 3.1 million right here, 6.2 million, 3.1 million. So a lot right there. We also have on the other end these large prints over here for even closer expiration, 128. Considering that these were taken after the bell, because remember you can trade SPY contracts for 15 minutes after the bell closes. Considering these are closer to the money as well, I am assuming these were people that are assuming we'll get some form of a gap up over the weekend, and they took these to potentially profit on that gap up. So I'm not taking these into account that much for what might happen this week. I will be taking these into account a little bit more just because these are pretty bearish prints. Again, these don't have to happen. These could be hedges, especially with SPY, big money hedges that is. But it is something to watch out for because if we do continue with this downward pressure, these strikes could be satisfied. So looking down through this, just incredibly bearish all across the board. All of these prints, 3.1 million right here for 435, just looking really bearish as of now. We do have to watch out because of how bearish this is, the flow going through this. And you can see up here, I have it filtered for 500,000 premium and above, and it's 84% to 16%. So that's very uncommon that you see this much put flow to call flow for this high of premium in SPY. So it is something to watch out for. And I'm not saying that we're going to continue falling a lot more. I actually think we are going to bottom out early this week, whether that be Monday or Tuesday. That's just my thesis. You don't have to play by that. But it does mean we just have to be a little bit more careful when we take our trades, and also be very observant. What happens if at a Tuesday we actually bounce and this flow starts to become a lot of calls coming through the tape? We start seeing a little bit of a squeeze maybe on Wednesday after FOMC. Then you're going to see a ton of calls coming through the tape, and that's going to switch to the total other end of the spectrum. And maybe you start adding into the strength because you know that this thing could squeeze out because of how many puts we were seeing before. Remember, a lot of these puts could be either hedges or short positions. And if this thing changes and turns direction really fast, they're going to have to cover all of these 84%, 141,926 puts that were taken on Friday for over 500,000 in premium. They're going to have to start covering. So one thing to keep in mind into this week, for sure. Also, another thing really quick to keep in mind is the dark pool. We did see, and we made a video the other day over the weekend of this very large print we had in the morning, and I'm just going to scroll down. You can see there's just a ton of dark pool throughout the entire day. It's taking me a while to scroll down to there, just because of how much it is. But basically, we saw this print right here, 4.77 billion in premium for SPY. That is the largest singular print that I have ever seen on SPY during market hours. So very, very big. And this is a very important level, 445.80. So as long as we are under that, it could be more subject to more selling. If we do get over it pretty quickly, then we could start going up in a rally. So definitely mark this level and just be careful while we are under it, because it could be a lot more selling. But otherwise, that will be all for me today. Appreciate you guys joining in. And remember, just be careful. There is a lot of volatility in the market right now. So hopefully we do have a profitable week this week, and I'll see you guys in the next video.